All right, hello everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays. And on a very special episode, I am joined by the guest you all ask for all the time, Willy Woo. How are you today, buddy?
Hey, Tone. Good to be here. Yeah. The trading show. Guys, just don't trade. 90% of traders lose. So I don't know why you're watching the show. You should not trade at all. Like, you're going to get cleaned up.
Getting the disclaimer out of the way, our guest, of course, doesn't need much of an introduction. Loving the new picture, coming fresh from the picture of the Understanding Bitcoin speakers. Unfortunately, Willy will not be making it out to Dubai. I need to remove him from this list of speakers, guys. So here's the announcement. Due to some COVID regulations and a bunch of quarantines that he would have to go through, he's not going to be able to make it. But I'm happy you're using the picture, man.
Yeah, no, it's Rusty did a good job on that. I'm like very pleased. Everyone loves it. I can be like a super shadowy, super coder.
Yeah.
So.
Of course, everyone watching this is certainly following Willy on Twitter. If not, go ahead and give him a follow. His websites are right there in the description, charts.woobull.com, which we will go through some of them. And of course, Willy Woo's forecasting newsletter on Substack. Here it is. Now also accepts Bitcoin for that newsletter. If you're not a subscriber, this is a really good idea. Billy's been pumping out this content, what feels like every 3 to 4 days lately with all the price movements, man. I'm going to click on the last one. I'm not sure if it'll give me a paywall or not, but I'm not going to scroll any further. So you guys go ahead and subscribe and support all of Willy's analysis.
No, thanks, Tone. Yeah. So, this Substack built Bitcoin payments for this newsletter, and it accepts Lightning Network too. So it's really awesome to see. So it means a lot of writers now can just write on Substack and accept payments, and even if they're coming from locations that are Nigeria, whatever, they don't have banking services, you can take Bitcoin. So it's been really cool to see that happen.
I'm going to click on an older one so I can scroll down. There we go. So there you go. So it looks something like this. This is one of his older newsletters. Really good insights, and he provides his history of forecasting. You one of these going back to number one. I always like seeing these things.
I could. It's like 75-80% accurate, which is it's just realistically that's quite high compared to like TA. TA, even the best of analysts get maybe 60% right. So fundamentally, the on-chain stuff works quite well.
Yeah, that's fair.
And I think I got a bit of flack in the crash because they were saying I didn't call it top, which was true, right? But like one of the things that I've done now is to do the newsletter at a higher cadence, because literally by the time that the whole thing was crashing, it was crashing out so fast that the letter was so long to put out that it looked like I didn't catch it. But we've moved to a faster cadence because the data coming in on chain is more responsive than this shit that we were working with maybe 2 years ago. Like there's a lot of innovations by Glassnode. Well, the data that we get now is, oh my God, it's like 10 times better than we had like 2 years ago. So it's quite responsive. Even in the hourly timeframes, it's responsive. Like we just broken out $1,000 in the last hour, and we could see over the hourly timeframes, every dip was being bought up, and those coins were being moved off exchanges. So you're kind of trading blind if you're not getting access to on-chain data, which a lot of providers out there. I use Glassnode because it tends to be the better quality one. But yeah, anyway, off to you, Tone.
Let me get 5 minutes. Let me just take a look at my charts. I haven't really looked at them yet today. And then we're going to head over to your screen share after that. So Willie mentioned the 1 hour chart. It wasn't looking great about an hour and a half ago, but suddenly we had a huge surge. We are now back above 47. Those of you that watched my video yesterday know that I drew these two arrows. I said I have a no trade zone right here between 45 and 46 and a half. But once we go above 46 and a half, I am now bullish that this whole thing can recover. This thing caught me a little bit by surprise. And of course, people will say, oh, everyone should have seen it coming because trading is always so easy. When in reality, of course, it's not. I'm going to take this line since it's no longer necessary. Here's our prior swing high on the hourly chart. Once this high is taken out, and it is imminently going to be taken out probably before I finish talking. As you can see, there it is. And once we take out this high on an hourly closing level, Bitcoin should be recovering very, very nicely. And we staved off disaster by avoiding a new hourly low close. I believe this whole thing is pretty much played out, but we'll get Willy's take on that as well. Going up scales a little bit. It would be nice to see a recovery. Also, as I mentioned the other day, we need to recover off of this in a V-shaped recovery very quickly. I think if we get stuck here in the mid 40s for another week or so, that's going to set us up for another leg down. But if we have a quick V-shaped recovery, and we're already pushing the limits of quick, so that means we need to get above 48 in the next 24 to 48 hours and stay up and probably get over 50 by Monday. Otherwise, I'm not going to consider this a quick recovery. If we can do that, then we should still be on pace for new swing highs and new all-time highs in the very near future. The Golden Cross is coming, which will also boost the price of Bitcoin higher. This is our Consensio chart from Tyler Jenks's work. This is our last day of Consensio. We really need to rally a little bit here today. Ideally back above 48 and a half to stay above the moving averages. Otherwise, some caution should be taken. But next 3-day candle should probably get us back into being bullish. The weekly scale is back in a bullish MRI zone, but it is a warning candle. So going into this week, some caution should have been taken. Personally, I didn't think you would take the big nosedive this early in the caution flag. I thought we still had another week or so before some kind of a correction. The correction came early. The correction was swift. The correction, it looks like, was fast. And now we are back into our zone. The weekly chart, however, will need another full week before it could be properly analyzed by me from a TA perspective on that weekly scale. All right, on that note, I'm just gonna briefly mention the events out in Dubai. Unfortunately, Willy will not be able to make it to Dubai for Understanding Bitcoin. Still trying to convince him to come to the financial summit. And if he is unable to do so based on COVID, we will definitely get him via Zoom for several hours on a couple of days during this 6-day event of traders and funds, and everyone will be able to pick his brain privately. That will not be available to the public. All right, that is it for me, Willy. We got 770 live viewers. I've said everything I want to say. Let's head over to your charts, and I'll try to ask some intelligent questions and keep an eye on the live chat.
Yeah, I haven't pulled the live chat up. Should do that. Might do that, see if I can.
I can shoot you a direct link. Hold on, just check your Telegram.
What's that? Is that working? You can.
Yep.
What do you check my Telegram for? What?
The link to the live chat. Here you go.
Doesn't come through yet. Oh, there we go.
Right there.
Great. Great. Thank you. Yeah. Okay. So, we had this dump. Everyone saw that. It was, I don't know, there was a lot of conspiracy around it because it was El Salvador's go live day for legal tender. DDoS attacks and whatnot.
Yeah, not everything is a conspiracy. Some things are just coincidence.
Yeah, it's like it was interesting to me because like I was looking at like, this is the setup, right? This is what you see here is the perpetual contracts, which are the derivatives that are the highest volumes that are traded on Bitcoin. And like the red line you see here is open value, not open interest. Open value is the Bitcoin denominated number of contracts, bets going long or short. And so, and that's a better comparison to open interest, because like Bitcoin increases in value, so therefore the amount of bets increase. So you got denominated in actual Bitcoins, and so this is what it looks like. So historically, these are like peaks here. Peaks here are zones where it's super high volatility, because you can, if it moves against a particular trade, there's a lot of contracts that will get liquidated, and then you can see the dump of positions as they get liquidated and back to baseline. And we had the same thing here, but it wasn't that high. I was very surprised. There was a few people saying it was very, very high open interest and it was ready for a dump. And I disagree. They were like, I don't know what they were looking at. Like when I look at this historically, it's not that high. And particularly,
and the funding rates were not very high either. It had just crossed the bullet zone. Yeah.
They were not FOMO longs, right? So it wasn't in a zone that at all that was ready to be, taken to the wreckers. Like all of this stuff here, like everyone's FOMOing long with similar open interest, and you could take them out, right? Because everyone's one-sided. You could take them out, but here not so much. It was neutral. So anyway, I did a bit of research, and like the data is not really available anyway. I had to pull this off FTX. I'm assuming other exchanges are similar in this, which is the US dollar borrowing rates on exchanges. If you're on an exchange, you're borrowing US dollars, you're basically borrowing to buy the underlying asset. So that's another form of leverage. And this is the amount of, like on FTX, we peaked at $1.86 billion being borrowed, presumably to buy, Bitcoin and shitcoins. So, it was like as it peaked, bang, we went down. So I think the view here was not really the full picture, because we just got into this zone where people were starting to go leverage on spot rather than futures, which, I have myself. I've started to use spot leverage instead of futures, because the lending rates were so low for a long time. But it suddenly peaked up here, and I think that caught most of us off guard, because I've been asked, does anyone have a site that looks at the spot margin on USD loan rates on exchanges? And no one really gave me an answer, so I had to pull it myself. I've asked Glassnode to see if I can provide that data in future, but like that's like the hidden leverage in the exchange part of the equation, which no one's looking at. And so I think that snuck up on us, and this chart's new. I haven't debugged it fully. There's like the latest bit that's off, but this is the FTX number of billions being loaned out, and that's not including all the other margin. Like you can borrow off Binance, Kraken, or whatever. So there's probably higher. So it was building up, and you can see it's not insignificant. That's just one exchange with margin. So I think there was a big untold story, and like no one's been tracking that. So that meant that we're very, very vulnerable to a liquidity event, which no one was looking at. And I was just talking to some friends. They run a market neutral fund, a very successful one. They do 1% of all volume on exchanges, and they reckon it was a OTC sell, a large OTC sell. Yeah, because you can see that pattern, because when you sell OTC, over-the-counter trades is meant to be one big whale selling to another big whale, but actually usually they can't match the two, so they have to buy it off. Someone's selling, then they have to sell it on the open markets, and that goes through a whole lot of algorithms, which then break up the order into thousands of little parcels and distribute it across all exchanges. And you'll see that pattern picked up. And so if you're a market neutral fund with your algorithms running trading across all of these exchanges, you can see those patterns well. And I think that, well, they reckon it looked like an OTC sell, just someone taking big profit right at this point here. And that distributed a whole lot of sales down. So someone took profit right there. And they had the Bitcoin. So I don't think it was the IMF, because I doubt they had the Bitcoin. Maybe they do, who knows? But yeah, so that was that. And that's what happened. Meanwhile, on-chain was completely bullish, right? So what you see here is the buying habits of whales. There's all the entities, not the wallets, but the clusters of wallets that whales hold over 1,000 Bitcoins. And the blue dot bubbles are the size of their buys, or the addition of Bitcoins into their array of wallets. So, you know, you can see that cluster buying here, and that took enough, right? Well, I was going to say, yeah, they bought enough to propel the price up. And so, you know, if I go to dolphin size, you know, what is that, 100 Bitcoins upwards? Similar event, like the buys are bigger than the sells. If you look at this chart here, which is the long-term investors, like never mind their size, but look at, like, are these guys like buying for keeps, or are they like traders? Because you can look at their personality based on their historic wallet interactions. And it's all just buying, right? And so super bullish, like buying. This is the bearish, right? Obviously. So there you have it. Buying, collapse, still buying, right? And then we can like look at, I was gonna grab it. Let's see if I can grab a chart on Glassnode. I probably have to log in. Glassnode.com. So yeah, like Glassnode's great because they do a lot of these on-chain charts right down to the 10-minute interval, which so I'm going to pull up a chart right now, which gets us down to the 10-minute intervals, and we can. So I'm looking at the net flows of exchange. Where are we going? Exchange net flow volume. Okay, here we go. I'm going to pull this chart up, pull it into the view. Okay, so we're not interested in this. We're interested in the 10-minute chart, and we're probably want to smooth it over 4-hour moving average. And then let's just zoom in to the last few days. And so there you go, right? The black line is price. So anything negative is this coin's moving off the exchanges. So there's an impulse here, that means that someone bought on the exchange and they moved it off, right? And you see there's a negative impulse, like the exchange balance is dropping. Anyway, another buying. So the price out of the cave is investors, which control really the long-term price. They're pulling coins off the exchanges, and then suddenly the fear starts initiating and these coins flowing into the exchanges, and then people are buying the dip, and there's some of them selling. But while we're going sideways, predominantly we're going buying. So it was if you're using this data, it was very clear to see, as this thing's going sideways, some actions happening. The fear ended here, and buying started to dominate. And as this thing's going sideways, every dip was being bought, and now we're going up. You know, my expectation is it's going to go off to the races, right? I expect a V-shaped bottom. Like there's no fundamental reason for the sell-off other than over-leveraged traders that got wrecked. You know, they were in long positions and they got liquidated, and that was the majority of the sell power. It was instigated by maybe an OTC sell, but yeah, we was $1.2 billion of long contracts and got wiped off the cards. got to be more than that, because like I saw the loan rates here just go from 1.86 billion to 1.3, you know, so like $500 million on top, and this is just on one exchange of spot leverage got wiped off, $500 million off FTX. Don't know what the others exchanges did. So there was a whole lot of traders that just got wrecked because they were on leverage, and that was our sell down. The investors didn't, they're buying the shit, right? So like, you know, like I say, you shouldn't be watching this show. Like 90% of you guys are going to get wrecked because you're buying on leverage, and 90% of leverage traders lose over the long term. So yeah, I mean, I could run this is an interesting chart, which pretty much my go-to these days, which is kind of, it's supply shock tracks the demand and supply between investors on chain. And the green lines are probably the most important, because that tracks what Rick Astley is doing, you know, the buyer that does not sell, he only accumulates. And so that's the long-term investors chart. And then currently we've got this spike in the short-term investors, and they're not leverage traders. They're not like degen longing at 10x. They're actually just buying spot and taking off the exchanges. But we know from their history that they buy and they sell over these long multiple month swing trades. And they've just gone bonkers buying. And this pullback, unfazed. They're still, if anything, they're still like in the buy zone. So swing traders over the multi-month, buying the underlying, buying it hard. Long-term traders, still pretty good. Last time we were in this zone, we were up at this price, right? 57,000, you can see that, right? They were at this kind of supply shock. Last time we were up in this zone. So very undervalued. This is kind of a supply shock based on exchange, which is kind of a mix of the two, because it's basically, you know, the coins are coming off. We don't know. The purple doesn't know who they're going to, whereas the red line understands that these coins are going to short-term traders and the green line is going to long-term traders. So this is kind of a middle ground between the two. So that's what it looks like, right? Investors are buying. You can dump the price as much as you like on leverage, but the leverage is flushed from the system. So it's going to be very hard to dump the traders because they're not in these heavy long positions right now. Meanwhile, these spot traders are buying it up. So it's going to be very hard for the downside to, you'd have to convince some of these traders to dump coins into the exchanges to sell off to get more downside. And yeah, this is like that model that I have, which tracks, you know, the supply shock, which is, well, I just turned off that. This is like the demand and supply by the investors. This is Rick Astley, you know, his long-term thing. And you do a look back and it's like, oh yeah, the price was here. That's the price. And then the dot appears, which is a look back on the price. And so actually some of them are all-time high, so you don't even get a dot, it's even higher. So this is a very conservative estimate of price, because that's where the last price was when we're in similar conditions on demand and supply. So 55 upwards, but actually it's missing the really, like, did I turn the red line on? Yeah, yes, like some of these three supply shocks, as I showed you before, these three, and they're doing look backs, and you can see that's all-time high, that's all-time high, well, that's nearly all-time high, so that you're not getting their look back, so they're actually gone to the moon. And so what you're left with is the dots that you do get a look back on. And yeah, it's way up, like including that short-term traded red dot, we're up in the 60 zone. So we're back in this sort of super discounted phase for Bitcoin. So I just think that like if anyone short this market, they might win over you know, a few hours, but it's going to be tough to win over the multiple weeks ahead. So yeah, that's really all I've got. I think it's just discounted coins right now. I get a lot of, I don't know, trolling. People say I'm always bullish, on-chain's always bullish. Will Clemente's like always bullish, and it's like, oh, that's what the data says, you know. It's bullish. I'm not biased. I'm just bullish because the data.
Eventually it turns bearish once it goes into overbought area, and we're just not in the overbought area.
You know, in 2018, I was bearish and everyone hated me. I was like, it's going down, it's going down.
Not as much as me.
Like you said, you were like, it's going down to 1,000. I was like, it's going down, it's going down. And then on-chain switched when we were in the 3,000 range, and I switched, right? We even had that big debate. So it's bullish and bearish on-chain. Like, just because I'm making bullish calls, well, of course I'm going to make bullish calls. It's a freaking bull market, idiots. So like there was bearish here, right? It was bearish, and there was a bearish call here. So, and like one of the things with this on-chain stuff is that it's very difficult to read. It's very difficult to read what the fuck's happening at the tops. Whereas you get closer to the fundamentals, like when you get closer to you can dump price as much as you like until long-term investors are going, I'm buying that. And they put a floor on the price. This is why we have accumulation bottoms. Like accumulation bottoms happen. I wonder how far back I can get this chart. I'll just show people this. I mean, it's kind of common knowledge. See how the price, maybe I'll turn the dots off so it doesn't confuse people a bit. You see how the price caves, and then like in all the historic Bitcoin bottoms, there's a sideways band. And if you think about what happened there, there's another bottom. There's another bottom, right? The reason for these bottoms is because investors are coming in and saying, I'm putting the floor on the price because that's cheap and I'm going to buy as much as I can at this bargain price. Same here. And actually this was, again, they were just buying. You could see that in the prior chart. Like it's going down and Rick Astley's buying. So that's what happens in accumulation bottoms. And in tops, and I should try and get the live chart, charts.woogle. In tops, it's very difficult to read on-chain, and actually you have to go to derivative data to so, you know, this is, see, the orange line is realized price. It's basically, it tracks how much money was actually put into the network by investors. And in these tops, they start to deviate so high above what the money was put into the network that actually you don't get much signal on chain. You know what the investors are doing, but you don't have no idea what the demented traders and degen longs are doing, right? And so on-chain is less accurate for the tops, and that's why often the tops are very difficult to pick with on-chain, which is what I do. And, you know, like it really, a lot of the data coming off derivative exchanges now have become dominant for tops. So I've had to do a lot more work on the derivative side to get the tops, because on-chain's less signal at that point. But we're currently in a zone where on-chain's quite strong. So like these tops were not called very well by myself. Like I think like that top was tragic. And this top wasn't called. But here on-chain said, get the fuck out.
Yes, the same exact thing on my end. Like at those tops, there was nothing in my charts that was like screaming that we're at the top. Though one of them did match an MRI top, but not the last two. So it was the prior one, the one in March. That one was timed perfectly with the MRI. So I was able, but once we broke that high in in April. I was bullish after that.
Yeah, no, it's yeah, it's tough to pick the tops. And actually it's, like know what, like really competent long-term traders over long term, they don't sell the top. They do get out when the top is the evidence for the top, but they never pick the exact tops. So it's very difficult. But the region of the top can be found. But like when we started to come down here into this zone, it's very fundamentally driven, and like everyone was bearish down to 20,000, and on-chain could see that accumulation happening. And so from this point here onwards, it's been 100% accurate. This is like supply squeeze, bang, it happened, consolidation, then bullish, consolidation. Every move has been caught by a combo of on-chain and technicals, actually. Yeah, like it's interaction between long-term investors and the short-term traders. So those two, when they're put together, can build a relatively accurate picture. So okay, that's it. In show. Done.
All right, no, we got questions. Can you take a look at the net unrealized profit versus loss charts?
Newpol. Okay. Newpol. Let's have a look. Newpol. Entity adjusted, which is the better one. Oh, they're trying to sell me an academy thing. All right. So let's just take a look at this. Let's just turn that off, and then let's move this out. And yeah. So what about it? What was the question?
No, just your view on it. Looks like we're still in a nice green zone there.
Yeah, so
no, it didn't really dive all that. Oh, this is a really large scale here.
Yeah, it's we're in a like ultimately we're in a bull market. We're not in the euphoric stage, like and we were getting quite close here. So we're back here, so we've got a lot of room to move upwards in this bull market. And if we're going to talk about macro, I suppose I should pull up the macro supply shock. Yeah.
Is it possible to take a look at this on a smaller time scale?
Yeah, but it's more of a macro, right?
Yeah, but this is very macro. Like
this is like crazy macro. This is well, this I find this only useful to look at when you're looking at super macro shit. Like where are we in the cycle? And like I'm saying we're not even in a cycle, guys. Where are we in a cycle? We're not in a cycle. I like that. And so this is the chart that tells me we're not in a cycle. Like like let's look at this full chart, right? You got the halvenings there and the red bars, like bang and pulse, halvening, supply shock from halvening, bang, supply shock, bang. We did it again here, right? So everyone's locked into these forward cycles. And generally you get this sort of run up, and then you run out of buying power, it runs out of new investors, and then we come back down to the next impulse. And so that's why Bitcoin's, got that meme of a 4-year macro cycle. This one's different. This time is completely different because of this. Like you see these peaks, that's peak accumulation. This is the ratio of the coins that the long-term holders hold versus the short-term guys. When the long-term holders are like peaking in their control of the coins, they're accumulating, and they're always matching the accumulation bottoms. This is accumulation bottom, right? This is an accumulation bottom, and then we had a reaccumulation in this bull market here. So we bottomed, and then we started to run up because that was the floor that these guys put on it. And then it went up, and then we went essentially sideways. If you ignore the COVID anomaly, it was derivatives driven crash as everyone went risk off as COVID hit and wasn't priced in. But this whole phase here, you can see it, that's reaccumulation. That's the super reaccumulation phase that powered this. This accumulation powered this. We're coming into a zone here, and this is a whole sideways here. We're coming into a sideways here that is a new reaccumulation. So no matter what this freaking 4-year supply shock from happening says, this is much more important. This is saying long-term buyers are taking coins off the market, and this isn't going to run up. And if you look at this, we're going to run up into 2022. And that tells me, this bear market we expected coming into 2022, because it's happened. You take the distance from the halvening, it peters out, and you have a bear market. We expect it to peter out, but this is telling me, no, we're not. It's like a fuck ton of coins are being locked up by a new accumulation phase. This is the second reaccumulation. Normally you kind of have like the accumulation, and then you get a second reaccumulation. This is it here. It wasn't very strong. This is the second reaccumulation. This is the third, which means we've never had a third before. There's no cycle left here. These 4-year cycles are gone. That's what this is telling me. And it kind of makes sense, because if you look at the inflation rate of Bitcoin, stock to flow, by the way, is inverse inflation rate, right? This is stock to flow. You sort of stretch it, and then you've got yourself a stock to flow. Poor man's stock to flow model by stretching it. But if you want to do it right, you do it with regression to lock it in too. But that's effectively what stock to flow is. But I wanted to show you this. This is the inflation rate of Bitcoin. Bitcoin is at 1.8% per annum inflation rate. That means that 1.8% of the total supply of Bitcoin is going to be dumped on the market that year. Whereas back in these days, it was 10%. Then it was 4%. Back here, it was in 60%. Of course, the supply shock had a huge impact, because you're going from 8% down to 4%. That's a huge impact. Now we're going from, we went 3 to 1.8. The next one's going to go from shit all to shit all, right? 1.5 to 0.7 or something like that. So the impact of buy-sell is very minimal compared to other demand supply, which I just showed you. That's demand and supply between investors. There's demand and supply from exchanges who mine Bitcoin through their fees and dump it back on the market so they can pay their bills and salaries in US dollars. And then you've got Barry Silbert and ETFs going, I'm going to take 2% out of Grayscale's 650,000 Bitcoins. And then I'm going to dump it on the market, right? 650,000 Bitcoins times 0.02% is, I'm going to dump 13,000 Bitcoins onto the market every year because I run an ETF, right? So it's these kind of rent-seeking vehicles. Exchanges are kind of rent-seeking. They clip the ticket, and all that just winds up being dumped onto the market, and that is going to it's already overpowering the mining of the Bitcoins that are coming into the scene and dumped on the market. So when you equate that, it's the halvening is less impactful now, and it's all these other ecosystem effects. So I think it's very unlikely we're going to have 4-year cycles again, we the very strong imprints. Of course, the halvening does have an impact, but it's got to compete against all these other impacts. So we may have it, looking like it has an impact, but it's not going to be these beautiful, look at these nice exponentials. Look at this. It's just up, down, up, down, up, down. It's it's obeying different demand and supply dynamics right now. So I kind of think we just go and wander a bit, and that was just riffing off the Newpool thing, which is super macro and talking about cycles. I could see this whole Newpool thing just wandering sideways and not doing this bottom up to the top and then bottom up to the top. I think it was just wander in a drunken demand and supply walk. Okay, next question.
All right. Well, speaking of mining, how do you see that playing out now that the Chinese miners, a lot of it has moved over towards the west. Miners are getting plugged back in. The last several halvings have upped the mining difficulty by several percent. The previous mining difficulty was up 4.5%. It actually just happened, the most recent mining difficulty. So it's too early to tell what the next one will bring. So what do you see on the mining side? I should probably take a look at the longer term hash rate charts. When do you think mining will fully recover? And what is your view? What do you think is the average mined price of a Bitcoin? This just came up on another podcast of mine where, for me, I think mining a Bitcoin is very, very cheap right now. And that is the ultimate price, I guess, for Bitcoin. And that's still concerning because I know there are miners that are mining Bitcoin at like under $10,000 a coin. So they'll still be profitable in a 75% crash tomorrow. So what is your view on that?
I don't know, like a lot of the miners hold, more and more so now. That'd be pretty darn efficient miners to be able to do it at 10,000, I would say. Not knowing enough about the intricacies of mining, but like miners, it's kind of cutthroat mining. Like it's really only the strong survive, and you have these regular cullings. So I mean, that's my difficulty ribbon here. And like we had a culling, right? Whenever this drops, it means miners are getting bankrupted and dumping their coins. So like in that regard, it's pretty safe. You're saying they're mining cheap. They're not going to be dumping their coins because they're only mining cheap because the weak miners are just got committed hara-kiri, right? They got, in this case, it was forced by China. They're off, the hash rate just dropped. They're non-existent. There's much less competition. And so only the strong survive, which means the strong in this case is any miner not in China because they didn't get shut down. And so they're making huge profits and they're not selling, right? Because you want to be thinking about selling when the miners are like barely making money, because if they tip over, they're going to dump because they're going to go bankrupt. They're going to get, there's the miners liquidation, they're going to dump in the market and it's going to force price down, and then it's going to liquidate the next miner until only the strong survive. So right now, if you're talking about these guys that are very profitable, that's very bullish. It's the opposite, right? You want to be scared when they're barely marginally profitable, and that's signs of bearishness ahead. And the other thing about miners is now a lot of them are public companies, or they're starting to become public companies, and in that regard, they don't even need to sell the coins because they can fund through share issuances. So people invest in them because they want exposure to Bitcoin. They don't actually sell because they're holding more and more of the Bitcoin stash, and that's their value proposition. Like it's kind of a leverage ETF. It's like you buy gold stocks instead of buying gold because it goes up more, right, by owning the production machine. So like that's another change, is that mining is now less about selling but more about accumulating. So that's what I think. And yeah, next.
All right. So I guess we can do a lot of like questions in a little bit. I'm trying to think of any other good questions I can throw at you. You've been mentioning altcoins a little bit more. What's your view on this alt season? Looks like the whole NFT disaster is getting way out of control. I mean, people are paying what, hundreds of millions of dollars for JPEGs now?
Yeah, Like, I don't know too much about the NFT stuff. I know that fundamentally it's a very interesting space. Like, I'm bullish NFTs fundamentally in its technology, because if you look at what happened with Bitcoin, we solved double spend, which means that now you can have a scarcity on the internet, and that has huge repercussions. And the very first most important use case is to do money, because you now can't print as much as you like, you know. So we have money now. Now, like, the interesting about NFTs is now you can digitize like the real world. Like, you know, I can digitize, you know.
Yeah, but
Like,
Bitcoin solved that by proof of work. NFTs
yeah,
are
but it's
solving
just solved it for money, right?
NFTs are solving it by some guy anchoring into his own personal domain.
Do you play games? Do you play games?
Video
Like,
games? I kind of
yeah,
stopped
like video games,
PS2.
right? Like these people that live their whole world in this digital game space, and it's becoming like a alternate reality. It's like Second Life, right? Second Life, there was like a dude that created a cafe that everyone liked turning up to, and he sold a $1 million advertisement on a wall on his cafe inside this virtual thing that he created in Second Life. Now, the thing about Second Life is that that cafe could not be cloned. Like, someone couldn't cut and paste it, right? People were going there. So there was no double spend in Second Life, only inside that centralized universe. But like, I'm saying that inside a broader metaverse, right? That's a very interesting concept. And maybe like it's hard to, if you were born outside of a digital age, it's hard to conceive. But that is a really interesting concept, and it's not even outrageous, because that's the entire, like, come on, we've had 20 years of software eating the world. Like literally every single newspapers gone, right? They're all online.
Oh, no, really, but my thing is, it's not a scarcity driven. I mean, my view is that claiming that it's a double spending thing is silly. It's a reputation. I mean, reputation is what is selling. For the price.
Yeah, but
it's not a technological innovation of scarcity. I don't believe that exists.
It's a consequence of, like, if you can create a scarcity, then you can create a reputation, right? Like, that thing I own, and then you can actually own it in a digital realm. Like, if you had JPEGs without the NFT, no one can claim that they can own it, because it can be duplicated. Double spent is to infinity. But the moment you can't double spend it, one person can pay and claim that I own it, and that gives them the reputation. The double spend solving that allows the reputation to exist. And so that's interesting. As for trading NFTs, I think it's a total bubble right now. I need to pull the data. Someone asked me to do it, a friend.
But no, Willy, I'm with you. There is a realistic solution to double spending, which is what Bitcoin did with mining. And then there is the theoretical bullshit story that everything in the crypto space since the invention of Bitcoin is somehow preventing double spending. And it's all basically a lie until proven, like the lie will eventually be proven, right? Because like none of this shit, none of these NFTs have, it's a story that they are technologically undouble spendable. It's just a story. It's not fundamentally true because they don't have Bitcoin's proof of work. So it's a story that is selling.
Oh no, that's crap. That's total crap. It's just like, you can't double spend it. Tell me one case where an NFT has been cloned. It hasn't happened because it hasn't been double spent. You're just saying that it's a story of reputation. But it's like, you can claim to have like the Mona Lisa, right? If the Mona Lisa got digitized into an NFT, someone will pay for it, right? And they will pay for it because of the reputation. There's no, and you're arguing that's not, it's double spendable. Like, well, you'd
But
have to break.
but infinite number of people can create infinite number of NFTs of a Mona Lisa. What makes one more special than another?
Well, I can take a freaking photocopy of the Mona Lisa and enjoy the artwork, but only one person has the Mona Lisa, right? Like, so
Right.
That doesn't
That's
mean
my point.
I can enjoy the JPEG, but I don't get to have that scarcity of ownership, which other people would bid higher for. So that's valid, and it's proven through centuries of art markets, right? Like, you can totally get a copy and enjoy it. It's close enough. You won't notice difference from like a few meters away. But you don't get the underlying store of value from owning the original. So, you know, and the original was painted by the original artist. It has all that stuff attached to it. So that stuff is not even arguable. It's valid. People just can't get their heads over a JPEG because they're so used to copying JPEGs. It's almost like they've lived too much in the digital age saying, I can copy everything. And they haven't lived through centuries of artwork going, no, you can't copy that. Like, oh, Tone just did a really good rendition of the Mona Lisa, but is Tone, you know, the original artist? No, he's not. And he's not centuries old and he didn't die. So you can't duplicate that. And that's what NFTs are representing. And that's just the beginning of it, right? You can talk about in-game assets, which is how Brock Pierce made his original money. Like, there's huge money made in this stuff. If you can take like an in-game asset, which people covet, and move it off into a real market, that's interesting. And then this stuff is fraught with bubbles, right? So the next thing, NFTs is getting, you know, they're getting really expensive, the art ones, and so they want to fractionalize it. Now they want to create derivative markets on it. And at that point, you're like going, this is no different from a 2008 housing bubble that's going to crash, because everyone's just buying derivatives of the thing and they're not even living in these houses or whatever. So I think that like NFTs are currently maybe in a bubble, or maybe we get a pullback, but then there'll be another bubble and it'll be fueled by fractionalization and derivative markets. And then that'll be the real bubble in NFTs. Like, there's another bubble to come. And yeah, that's my thought on NFTs. I don't trade that stuff because I have my hands full trading like the traditional stuff of on chain. But yeah, I mean, it's fun. Like, it's fun. The early guys are making huge amounts of money. And you're obviously passionate if you read the Twitter streams. Everyone's getting into it. But yeah, it's bubble. It's like Bitcoin. We had bubble and pop, right? Like Peter Schiff was right sometimes. He said it's a bubble, and certain times it was a bubble and it popped. But the underlying technology was valid. So it carried running up another bubble. This nature of markets is they bubble and they pop. And I think NFT is similar. It's a bubble, it'll pop. But the underlying tech and reason for value is not wrong. I don't think it's wrong. I think it's valid because we have centuries of history of human behavior around this.
All right, let's get back to a little bit of a Bitcoin discussion. We are coming up on an hour, so we're going to probably wrap this up within the next 10 minutes. What do you see from Bitcoin adoption? I don't know if you want to pull up one of those charts, and how are you seeing this whole El Salvador situation? It was just like crazy timing with El Salvador buying up what they bought, 500 Bitcoin or something. It's not a crazy amount, but obviously any purchases of Bitcoin are good purchases of Bitcoin. What do you see on the adoption side? And where do you see that's going? And how do you see the Lightning Network playing out?
Lightning Network's going bonkers, right? The amount of capital going through. Like, actually, I'm getting about 30% of my payments in Lightning, so I'm tracking that right now. I need more time, but like, I want to see if that's growing. But 1/3 is not bad, right? 1/3, I expected 90% to be on chain, but 1/3 is not bad. Let's have a look at what's going on. This is like, I'm only looking on chain, of course. I can't see what's happening on exchanges. This is what's happening with the adoption. That's 30 days, pull back a bit. It's like we 14 days. Yeah, it's like we had the adoptions. This is the number of people coming into the Bitcoin space using on-chain wallets per day on a 14-day moving average. So currently at 11,000 new people coming in per day. So actually, I didn't see any kind of blip from El Salvador, but maybe a lot of that's Lightning. I don't know how the DUWSell wallet works, whether it's custodial Lightning, it probably is. So you don't even see those guys coming on board. And I've got no Lightning Network data. Longer term, find the adoption curve. Longer term, I've got like this chart. So this is this is a super long-term chart going back to 1980. That's world population. You can see it rising from 4 billion to 7. Well, it's more than 8 now. It's a bit out of date. So yeah, that's internet users. This is PayPal accounts. It did a little bit of an uptick because of COVID, I think. So this is the ID verified accounts on exchanges. You can see since 2016, most of the activities moved off to the exchanges, new users signing up without pulling their coins off. I'm waiting for the latest data point. These are done annually by like market surveys of the industry. But this is, of course, this is like the daily view because we can get the data on chain. And you can see, it's hard to see in this, like if I pull it back, you can kind of see this, there's an uptick since, essentially since October when the price ran up, there's an uptick. So I kind of expect the exchanges to reflect that. And like, we must be up between 150 and 200 million users right now. I mean, this is the only story in town. I mean, people look at the price action, blah, 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 but this is the bomb, right? This is like how many people actually adopt Bitcoin. It's gonna flip PayPal in the next, I don't know, 2 years. And then by the end of the decade, it's on track to get very close to the internet adoption, which is kind of like the 4 billion people mark. So half the world in the next decade. Like, so this is why the IMF, central bankers, like doing their best to FUD it, because this is the biggest threat to central banking. I think that the pennies dropped only this year, I think. Like you could see it coming 4 years ago. Like, but it was a joke then. It was like a fraction of 1%. But now we're at maybe 2 and 2.5% of the world, and it's exponentially growing. It's like the fight now is between Bitcoin and central banks, central bank digital currencies. If they coexist, then that's fine. You know, you can spend your fiat and store in Bitcoin. But I think this is the only story in town, which is the fastest adopting network the world has seen to date, faster than mobile, faster than the internet, faster than anything we know. So, I mean, that's the real reason why we're in this game. We buy Bitcoin because we think it's going to be the new money. And it's backed by 12 years of trend. So maybe it goes down, but it's very hard to see because it through all its volatility, the price goes down, but adoption doesn't. So through all its volatility, it's a pretty strong fundamental case. Yeah, and this is, I think this is the most interesting thing in crypto. I mean, it's really cool to do all the smart contracts platforms, and you know, people follow Ethereum and Solana and NFTs and all this. That's great. That's building out the new kind of what you can do with it. But in terms of impact to the world, changing the money we use is really powerful. And I think that's going to be maybe the most impactful over the next 10 years, that the the money that we use is going to be redefined into a Bitcoin standard. And one of the things I've been thinking about, maybe correct me if I'm wrong, maybe there's someone in the audience that knows the gold standard better, but as far as I can tell, the gold standard allowed money printing, right? Because you just changed the ratio of gold to paper money, and suddenly you double it. Suddenly, like, people have claim on half the gold, and so who gets the other money is the central bank. Like, it's going from $16 to $32 per ounce of gold. All right, so you can only claim half the gold now, and I've got the other half. So I think the money printing was just as capable with the gold standard, and the thing with Bitcoin, it's a different standard because the central banker doesn't hold the Bitcoin; it's held by everybody, and we're actually trading the underlying through Lightning Network, right? So that's that. And one last thing, when I look at this chart, well, 2020, roughly 2021, we're going to 2030, we're going to breach internet users, 4 billion people on the planet by the end of the decade, maybe all of them. Over the next 10 years, who's the president of the US right now? How old is he? He's like 87. Do you think these guys are going to be around in 10 years? The interesting thing,
I don't know, man. Some of the most evil people just can't freaking die.
They can't die.
They just get older and older and older, man.
Right. So the thing is, these guys have the most locked up capital of any generation in the US. Millennials have shit all, right? The least. But the next 10 years is the biggest inheritance, because the guys in power right now are about to pass on over the next 10 years. And the millennials are pro crypto and Bitcoin. Like, you look at El Salvador, it's a millennial, right? Millennial leader. You look at the founding of the United States, they were millennials. These guys shake it up. They see the world, they see the future, and they change everything. So that's the other thing when I see this is like, oh, we're going to get to here. And then the next 10 years, you got to look at who's running the show. And it's going to be the millennials. And they understand crypto, and they're not going to shit on it with regulations and that try to kill it off, because it's the lifeblood of the future. And so I think that's really interesting. And people think that IMF, there's a lot of thought about the IMF and nation states going to kill Bitcoin because you don't take on a nation state. And I'm like going, well, have a think about how it works and the people in charge and the succession of power. I think it's a completely different story. This is why we're in Bitcoin. Strong fundamentals over decade-long sort of trend lines.
All right, so let's go ahead and wrap up the show with some maybe general predictions. Obviously, you are bullish going into the end of month, but let's do this. Do you think that we will make a new all-time high, or not even all-time high, sorry. Do you think we will break the $55,000 level by end of month?
Oh, end of month, short time frames, just random, man. Probably not. Who knows? Like, who knows? I have to look at a chart. Like, I think that's just dumb. I think it's a very dumb question. Like, I don't care what happens in the short term. I don't.
All right, so let's go a little bit longer. Let's go into end of year. Probability of a new all-time high, which means 65,000, and probability of breaking 100K by end of year.
65,000. I'd give it pretty high odds, maybe 80-90% chance, even 95. Like, from what I see,
my pinned tweet still says 100K by end of year. I'm sticking to it with a slightly greater than a 50% shot at breaking 100K by end of year. I remain bullish into end of year.
Look, using this model, like, we're going to jump into this zone here. This zone here is like chopping around. Like, it's a question of where we break this all-time high. But once we do, I think it's kind of binary. It's like, once this accumulation band is done for, we're going to have another run up like this. And I think we'll do it before the end of the year. But then is it going to break 100,000? Is it not going to break 100,000? It just depends on the exact timing of the breakout, which is really hard to time, right? It's like, you know what it's like when there's accumulation bands going, when is it going to break out? When it breaks out, it's sudden and it's fast, and it could have swung down and waited another few months. So it's very hard to know exactly when, but I know that it's going up. Like, depends on how much of accumulation time we take in here. I think we'll break this by the end of the year. There's plenty of time. And then once we break it up, I think 2022 looks really strong. And I think that the options market, it's like very undervaluing 2022. Like the call options are going really cheap. Like, you know, in 2022, you can buy March or June 2022. Like, you know, like probably a lot of people betting inside the, I wonder if we can pull this up, right, on Glassnode. Open interest on, like, wait, I want to do options. Options open interest by strike price. Okay, let's go to our March. Yeah, okay, so like right now, most of the call options people are betting on will be at $70,000 by March 2022. And in June, the bet's 100,000, right? Like, then if I take you back to this model, where is it on? Too many charts. I'm gonna start closing them. Don't need that. Don't need that. Don't need that. That. Okay. So we know inside here we're going to break. Once this accumulation is complete, we're going to run up because we've seen that. We've seen it there. Every time we peak here in accumulation, we have a strong run up. So we're going to peak here, 2022. Maybe it ends here and we're going to have a strong run up. That strong run up means that we break 100,000 and higher. And so I just think that the call options are well underpriced. 100,000, yeah, we'll do that by middle of next year. And no worries if we get that finish of the accumulation and it runs up. Very undervalued. Some smart people bidding higher here. Overall, this is like this stuff is, I mean, there's a lot of people bidding in this. But they're still saying 100,000. That's super conservative. March, like, yeah, that's fair. Maybe 70,000. I think that's under. But this is the most interesting one, is these far off calls. Well, this is the first time I looked at this chart, but like, it's interesting because there are a lot of bidders in there. I didn't think there would be so much, but the bet is 100,000, and then you've got a whole bunch of conservative bearish people, which, like, I don't know why the hell you'd have a 40,000 call option. That you might as well just buy the future. So, you know, and then you've got these guys here. I'd be like, they're bidding on $20,000. So yeah, but majority of the market's thinking like what we are, which is over 100 grand. That's fair. It's fair. I kind of want to know what this was a few weeks ago, because I really thought this was undervalued. If you would like, people weren't thinking this, but
what exchange is that data from? Like, where is this option data?
It's Deribit. Everyone trades on Deribit.
Okay.
But if you're a whale, then you'll use an OTC on options. Yeah, options is really interesting because you have strike price, you have volatility in a time and time frame, and it strikes me as that's exactly the kind of information that on-chain models give you. That gives you targets, it gives you time frame, and kind of frames the volatility as well, particularly when it gets close to the floor. And so I've started trading options a little bit more now because I realized it's taken a long time to figure out, but like options are better matched on-chain models than like just straight out futures.
All right. I think we're good to wrap this up. I'll steal screen share back from you.
Good.
And here's that hourly chart. We're still in an upward trajectory. We have broken above the consolidation. My line was 46,500. And if we can get above it, which we did, I expected us to rally very, very nicely. One more peek at the daily chart. We are holding the 200 moving average, simple moving average very nicely. But in order to have this V-shaped recovery, I do think we need to rally past 48,000, probably by end of day today, and going into the weekend, we should be in that 49 back to $50,000 range. We got to get out of this zone very swiftly in order to maintain that nice bullish momentum. Once again, guys, if you are not yet following Willy Woo on Twitter, go ahead and do that. His links are in the Twitter description. One of them is, of course, his newsletter over on Substack. And we didn't look at many of the charts from Woobull, his website, but you can also check that out right there, charts.woobull.com. All right. Once again, I will be heading over to Dubai in October for Understanding Bitcoin and also the Financial Summit. So go ahead and check these out and join us, thefinancialsummit.com. Also, everything is on tonevays.com. All right. Willy, thank you so much for joining me once again. Hopefully, I will see you on this channel again early next month, or maybe at the end of this month. We'll see how the month is closing. Any closing thoughts?
No, that's all. It's yeah, as my friend says, I'm buying this. This is a bullshit dump. he always catches the bottom. He's like, this is a bullshit dump I'm buying. So that's it. Go subscribe to the newsletter if you want. I take a hit every time I go on the show, guys. Like,
yeah, guys, Willy's gonna stop coming on the show because he keeps losing subscribers every time he comes on this show. People get the information for free on this show, but please support. Please check out
I'm gonna be on the show less now because everyone's cheapskates. So yeah, that's my closing thoughts.
Willy, thanks for joining me. Always a pleasure. And thank you, everybody, for watching. And I will see you all on the next episode, probably tomorrow morning. All right. Bye, guys.
Okay. Bye.